About this is a piece of bad news just to temper our enthusiasm for South Africa. Moody said in its outlook on South Africa's banking system that our outlook remains negative. The credit rating agency said poor prospects for exports and private consumption will limit banks' credit growth and new corporate business opportunities. This is seen prompting a rise in non-performing loans. Nondas Nikolaidis, who is the senior analyst at Moody's, joins us now on the line from Cyprus for more. Nondas, a lot of people will criticise organisations like yours because they're sort of retrospective, but would you say this is an accurate reflection of the future?
Yes, hi, and thank you for inviting us to comment on this report. I mean, just to clarify, this is the banking system outlook that we publish on South Africa and represents our forward-looking assessment of the fundamental credit conditions in the country and how this affects the bank's creditworthiness over the next 12 to 18 months. So we maintain the negative outlook, and this was based on three main drivers. First of all, it's the economic slowdown that we're seeing currently in South Africa. The Q2 figures came out 2% compared to 3.1% in the second quarter in 2012. So obviously this will create challenges with regard to new business opportunities for the banks. And we're also seeing weaknesses in exports. This will inevitably have some impact on the asset quality of the bank. So we're likely to see non-performing loans leveling off and probably start rising after 3 years of improvements. So this is the first driver of our negative outlook. Second driver is the linkages between the sovereign, the government of South Africa, and the banking system. We currently have a Baa1 rating with negative outlook on the sovereign. Given the fact that the banking system is highly exposed to the sovereign through government securities and other state-owned loans to state-owned entities, this inevitably links the credit profile of the two. So as long as the sovereign has a negative outlook, inevitably the banking system will also have a negative outlook. And the third driver is the funding challenges that we see for the South African banking system. As you might know, the banking system is highly dependent on short-term wholesale deposits, which it's a structural issue, and because of that, at the moment, the banks cannot meet the Basel III liquidity requirements. But we do recognize the stability of these deposits and also the fact that the banks have been enhancing their core liquidity in the last 2 or 3 years or so. Other mitigating factors is the fact that we have a good track record in terms of resilient core earnings for the South African banks. So even during the 2009 recession, we've seen banks reporting decent returns. And the fact that the banking system is well capitalized. We're talking about an average Tier 1 for the system of around 11.8% as of June, which is, I would say, one of the highest among the BRICS. So the report that we publish today is a balance of all these drivers and of all these factors, you know, with the negatives and the positives, but more skewed towards the negatives, I would say.
I think, yeah, obviously more skewed towards the negative, but what actually encourages me somewhat, Nondas, is the fact that the three main drivers that you talk of, number one, GDP, that's out of the hands of the banks. That's to do with the country, that's to do with emerging markets, that's to do with international investment flows and the vagaries of the international economic system. So that's number one. Non-performing loans, you talk about the link between sovereign ratings and banks' ratings. Again, that's out of the bank hands because it's the government's problem. And number three, funding challenges. Again, so we've got a well-run banking system making good profits for shareholders, and if the other factors outside of their control can get back on track, then we're actually set fair for the future, potentially.
Yeah, I mean, inevitably this is the operating environment where the banks operate, and, you know, most of these factors are kind of out of their hands. I agree with you. But, you know, then again, this is where they operate. So, you know, when we have a slowdown in economic growth, inevitably the business opportunities and the lending, let's say, opportunities for the banks are limited. So, you know, comparing the GDP of 2% with an average of 4.9 and 5% pre-crisis prior to 2008, then this gives an indication of how the banks can generate earnings out of this environment. But yeah, most of these factors are kind of out of their hands, specifically because there are exogenous factors. The European economic slowdown, which inevitably affects exports coming out of South Africa as well.
Nondes, thanks very much for making time to speak to us this lunchtime. That's Nondes Nikolaidis, who is from Moody's, and he was chatting to us on the telephone from Cyprus. Where are we